Hi there, a very good morning and welcome to everyone who have joined us live on this broadcast. You're watching Opening Bell with me, Stacy Pereira. Well, let's get you a quick recap of where we've left off trade yesterday, and seems like, that Nifty 50 is just hovering around that 23,000 levels, but not managing to sustain that, though we hit an intraday high of 23,101, but lost ground in that last hour of trade. Sensex touching about 76,000 odd levels, but profit booking not erasing pretty much all those earlier gains. Nonetheless, we do have quite a few stocks that we're going to be talking about, many of them that touched new highs, 52-week highs coming in there for the likes of Glenmark Pharma, Ashok Laning closing in about 8% of gains for those stocks, and whole host of stocks that are going to buckle under pressure perhaps after their Q4 earnings results that have come out. So we'll be discussing all of those in detail, but first let me take you through all the top headlines. Now, stocks in the Asia Pacific have opened in a mixed range in the absence of any cues from Wall Street as well as Europe. Wall Street was closed due to Memorial Day. The Gift Nifty, though, is here indicating a flat start for the Indian markets. And crude prices remain range-bound, with Brent now nearing around $83 a barrel. Silver, on the other hand, has surged over 4% overnight, while gold rises from its weekly lows to about $2,350 an ounce. LIC sees its total annualized premium equivalent, or APE, growth beating estimates, while its value for new businesses as well as VNB margins have missed expectations in the Q4. In earnings that you need to track today, IRCTC, Aditya Birla Fashion as well as Brigade Enterprises will be reporting their Q4 numbers. And Timken India's Singapore parent is likely to sell about 6.6% equity via a $213 million block deal today, is what we're given to understand. The deal will be priced at a discount of about 10% to yesterday's closing. The block deal is also likely in Inox Wind, with the promoter entity expected to sell about 5% stake. And the world is responding to in outrage as retaliatory airstrikes by Israel has left over 45 Palestinian civilians dead. The UN Secretary General Antonio Guterres, at a closed-door Security Council meet, says that the horror in Gaza must stop, while French President Macron calls for an immediate ceasefire. The EU's foreign policy chief also says that Israel must heed to ICJ's orders to halt the offensive in Rafah. Well, on your clocks there, we barely have 8 minutes to go, but we'll know exactly whether we are able to, surpass that 23,000 levels for the Nifty. It's something that we've been rather playing hide and seek, we would say, with that particular level. But it seems like there are quite a few externalities that are really impacting this, and also perhaps a cautionary note just ahead of the Lok Sabha elections here in India. But let's also take you through some of these F&O cues that you can keep your eye out for. This, remember, is the monthly expiry week, but we are seeing a lot of option data. The maximum call open interest that remains at that 24,000 strike, whereas on the put side, it is the 23,000 strike that has owned the maximum open interest, and that perhaps also be that key level for the Nifty that you can be tracking. When the Nifty PCR then, or the put call ratio, is fallen this time around to about 1.02 versus the 1.11 levels it was in the previous session, but it's still above that 1 mark, so which means that there is that positive sentiment hovering in the market. Whereas the India VIX, or the volatility index, that one continues to remain on the higher side, reaching a 2-year high now on May 27th. As we're nearing closer to the Lok Sabha election, experts expect it to remain at these elevated levels at least till the result day on June 4th. We did see the India VIX climb to 6.83%, coming in at 23.19 levels. This is the highest closing for the India VIX level since May 25th of 2022. So that means that there is going to be, excessive volatility in the markets, and that's something that you can expect in the coming sessions as well. In terms of the stocks that are in your F&O ban list, well, no new stocks have been added, but a whole host of them that have been retained in that list. Well, NSE has gone on to retain Biocon, GNFC, Hindustan Copper, Vodafone, in Idea, as well as Piramal Enterprise into the F&O ban list. So those ones will continue there. Whereas it has also removed Bandhan Bank, India Cement, Nalco, Punjab National Bank from this F&O ban list. So about 5 stocks that continue to remain within the F&O ban list for today. In terms of the money and the fund flows and where the setup is really looking for our trades, while FIIs have continued to be net sellers, this time selling close to 541.22 crore rupees worth of equity, whereas it was the DIIs that did the buying and bought around 922.60 crore worth of equities according to the provisional data that has been put out. And remember, like I told you, the stocks that you need to be watching out for that will be putting their Q4 numbers out today. Aditya Birla Fashion and Retail, that is one stock that has been quite a bit in that F&O ban list as well, but it has been out for some time now. You also have Amara Raja Energy, there's going to be Aster DM Healthcare, IRCTC, RR Cables and Wokhart, along with 440 other companies that are going to be announcing their Q4 results today. So a lot of action expected there. But of course, we are going to be tracking where the markets really are poised to be at this point. And joining me for that, let's discuss what strategy one could really adopt in such kind of a scenario where we are hitting newer highs, but there is also enough and more profit booking that is taking place. So joining me for that is Ruchit Jain. He's the lead research analyst at 5paisa.com. Good morning, Ruchit. Always a pleasure to have you with us. Ruchit, let's just talk about the Nifty first. We are continuing to see those high formations, 11th consecutive session in fact for it, and trading above all of its key moving averages, despite that selling pressure that we are seeing come towards the fag end of trade, but still a positive side. What are your thoughts? What are the levels that you're tracking at this point, and do you think there is more volatility at least till June 4th that we can expect, and what would be the levels then that we should be looking out for on the charts?
Yeah, hi, very good morning, Stacy. Well, if we talk about the data first, then the data remains quite positive for the markets. Recently we have seen that after that corrective phase of 1,000 points from 22,800 to almost 21,800, that correction was mainly because of short formations by the FIIs. They were not only selling the cash segment, but they had also formed short positions in the index future segment. But in last 1 week, they have covered those short positions. And if you look at the long short ratio, just a week ago, the long short ratio was somewhere around 28 to 30%. Means only about 28-30% were on the long side. The rest of the 70% positions were on the short side. But in last 3 or 4 trading sessions, they have covered all their shorts, and their long short ratio now stands around 52%, which means that they have marginally more long positions than the short positions. So the corrective phase which was there because of the short formations was by FIs, that is behind us because they have covered all those short positions ahead of the expiry itself. Now, yes, volatility is there, and that everyone knows because of big event lies ahead of us, where the election results would be declared. And till then, I think volatility is expected to continue because there would be two thoughts where market participants would not like to factor in any kind of uncertainty in the election results. So I think the volatility is likely to remain high till the event outcome. But the texture remains positive because overall trend is positive. We are forming new highs. So high top, high bottom structure is there. Short form of positions are out of the system. So there are no new shorts getting formed over here. So I think it remains a buy and dip market in such volatility. If we get any kind of decline around the 40-hour exponential moving average, which is around 22,800, I think that should be used as a good buying opportunity. Right. So we are advising our clients to take a buy and dip approach on the markets rather than getting scared over here. Look for buying opportunities in this volatile market when you get any such declines.
Right. So any decline should be an opportunity is what Ruchit is saying, and 22,800 levels is what he is suggesting. Ruchit, do stay on and we'll be talking about more stocks, but let me put your focus on, during the block deal part of trade, we are given to understand that Timken India would have possibly have seen some exchange of shares that have happened. Sources are saying that Timken Singapore, which is seeking to, somewhere around $213 million, it's looking to pair its stake in Timken India. Now, this is the second block that has been launched by the company, and the likely seller is the foreign parent, which is Timken Singapore. The size, like I told you, is somewhere close to $213 million, or roughly about 1,775 crore rupees. This, of course, is a discount of about 10 odd percent to yesterday's closing price. The total size of this would be somewhere around 6.6%, given the floor price of 3,550 per share. Now, we're also given to understand another block deal that could have happened in this hour would be that of Concord Biotech. Now, sources are saying that Concord Biotech, Citigroup is the sole book runner for this particular block deal, and it is 1575733 Ontario Inc. that is the likely seller in this case, and the floor price for this one is kept at about 1,320 rupees. This again is about comes, roughly the offer size then becomes about 468.4 crore rupees and close to 3.4% of its total equity. There is also a 90-day lock-in period for the residue stake, and the seller will have that residue stake of 2% in the company post the transaction. Another block deal that could happen, and like we mentioned while telling you the headlines, is that of Inox Wind. Sources are saying that the promoter entity of IWEL is likely to share via this block deal, and somewhere close to 5% stake. Again, this coming at a discount of about 5%, somewhere close to the floor price of 148 to 150 rupees per share. So that being the three block deals that we're likely to have seen take place: Inox Wind, also Concord Biotech, as well as Timken India, as the block deals that we're likely to have seen. But here we are at opening bell, not managing to climb so much to those 23,000 levels like what we saw in yesterday's opening or in yesterday's trade, where we managed to hold on to those levels. But here we are, 22,950 odd levels is where we are, just 0.2% gain for the Nifty 50, whereas sensex also hovering around that 75,500 odd levels, about 150 points at opening bell. Mid cap, small cap also looking both in the positive at this point, 0.3% gains for the mid cap, small cap also close to nearing about 0.5% of gains coming in for the small cap. The bank nifty, that one is what we will discuss also further, but the bank nifty, and we saw the financials really being the biggest drag in yesterday's trade. So banking holding out right now. Nifty IT, that pack also seeing some bit of gains, whereas pharma, there are a couple of stock reactions that we're seeing when it comes to the pharma pack. Whole host of brokerages come out with their take on Aurobindo Pharma. The FMCG packs also holding out at this point, 0.2% of gain coming in for the Nifty FMCG as well as the consumption basket. So both of them in the positive. So most of your sectoral indices right now in the positive. Metals seeing some good steady reactions. They're almost closing into a 1% of gain coming in for the metal index, whereas auto is the one that is seeing some bit of pressure, and it was the case even yesterday, where that one is pretty much in the slow lane, we would say, in the past few sessions. Realty index trading pretty much flat at this point. So both the auto and the realty index are the ones where you're likely to see some bit of added pressure. But let's look at the components then, and who's making it to the gainers list today. On your screens you can see the gainers there. Hindalco once again among your top gainers. You have Shriram Finance as well as Wipro, interestingly, after seeing some bit of losses after that sensex rebalancing, we are seeing Wipro on your gainers list. There's NTPC, there's Adani Enterprise, and remember there's a board meet that is to take place for its fundraising plans for Adani Enterprise. JSW Steel also continues among the metal pack. You also have Tata Steel there, L&T and IndusInd Bank among your top gainers, whereas your top losers at this point are the laggards coming in from Britannia. There's Maruti Suzuki as well as Bharti Airtel among your top laggards. BPCL as well as Bajaj Auto. So two of your bigger auto components coming in there from your laggards, both Maruti as well as Bajaj Auto. So from within the two-wheeler as well as four-wheeler space. But let me go back to Ruchit and ask him about Bank Nifty, because that's interesting. At least if you look at yesterday's trade, we did see HDFC Bank and the likes, at the start of trade were the ones that were giving that momentum. But by the fag end of the day, we did see the biggest drags coming in from your banking and financial space itself. So how is one supposed to be looking at, if you look at Bank Nifty, the index as well as the components that are, playing that game, what would be, what are the charts really suggesting? Is there more within the banking space and the Bank Nifty specifically?
Yeah, so if you see, then Nifty has made a new high compared to what we saw during end of April. But Bank Nifty is yet to make a new high, and recently in last 2 or 3 trading sessions we have seen that the momentum is regained in some of the private sector banks, especially if you look at HDFC Bank, Axis Bank, such names have shown a decent pullback from lower levels. So I think the momentum remains positive. There are no negative signs. The RSI also hints at the continuation of the move, and we could see the Bank Nifty index testing that, crossing that 50,000 mark for the first time very soon. So overall bias for the Bank Nifty also remains positive. Some of the heavyweights which I just spoke, especially Axis Bank, is looking quite constructive, which has been outperformer during corrective times as well. So on the lower side, support for Bank Nifty index would come around 49,000 to 48,800 range. So I think any dip if we get towards that 49,000, 48,800 mark, so that would be a range where one should look for creating fresh long formations.
Right. Interestingly, I'm going to also take a couple of queries, but yesterday the whole fertilizer pack was something that was quite a buzz, and there is a query coming in on, how should one be viewing National Fertilizer Limited at this point. So, Ruchit, if you could, help our viewer as well, and also give us the whole, what is really a buzz? Is it just in this run up to the elections that we are seeing this kind of momentum, but why fertilizer right now? What are the, news cues that are moving this whole pack?
So these are some high beta names and cyclical stocks. Whenever we see some good momentum in the markets, I think such names do give some positive traction. And good monsoon news which are there, that monsoons will be above average. I think that could be another positive factor for these stocks. So overall sectoral view remains positive, but I would be very specific within this sector. NFL specifically is yet to give a breakout which would be placed above 111. So only if we see a stock surpassing above 111 level, then we could expect some good momentum. Otherwise, comparatively, if anyone is looking for fresh long formations, then RCF seems to be better placed within this entire pack, where the stock has already given a breakout above that 155, which was the resistance. So, overall sectoral view remains positive for the short to medium term. But I would prefer RCF over NFL if one has to take some fresh longs.
Right. So I hope that answers Vignesh's question, but he is suggesting that you rather look at RCF instead of NFL. So let's also discuss a couple of other, numbers that have come out. One being that of LIC, and they did show a profit of about 4.5% coming in at 13,781 crore rupees. Even their net premium income has seen a jump of close to 15.5%. The other income is what is really surprising, and that has surged multifold, we would say, coming in at 14,164 crore versus the 484 crore rupees that it was earlier. The net commissions, though, have fallen by 2.2% at 8,273 crore rupees. Value of new businesses, or VNB, which is important to track when it comes to insurance companies, that one has come down by 1.6%, whereas the VNB margin too has seen some bit of a decrease, coming in at 17.2% versus the 19.4%. What's interesting, though, is that the government is going to get a 3,662 crore rupees of dividend from being LIC's biggest shareholder. We just saw what the RBI has given the government. Now LIC also, obviously on those similar lines, 3,662 crore rupees is what it's going to be, whereas the final dividend for other shareholders has been put out at 6 rupees per share for FY24. Of course, there are brokerages that have come out with their notes on LIC, where Citibank has a buy call with a target of 1,295 rupees per share. The company has reported an overall return on the embedded value of about 25% in FY24, which seems to be significantly lower than what Citi was estimating. The core embedded value, though, for FY23 was somewhere around 2.8 lakh crore rupees. So which is why they are seeing this difference. It is quite difficult, they say, to comprehend between the movement between the mark to market as well as the core embedded value for FY24, as well as they're waiting for the clarity to come out from LIC. But Ruchit, quickly to you, how are you looking at this particular one? It had at some point, just about last month managed to surpass SBI also when it came to market capitalization, and we were talking about how it is among the PSUs that you should keep an eye out for. But what are the charts really saying for LIC? Could you give us more on that?
So I think the price-wise correct downside seems to be very limited. We have seen one corrective phase in the second half of February, where the stock managed to form a good support base around its 100-day exponential moving average, which was around 880-900 range. And again, the pullback move has been supported by a rising volume. So price-wise downside seems limited. If one has a bit of positional view for the stock, maybe next 1 or 2 quarters, then I think one can again expect good returns over 1,200 rupees in the stock. So hold on to existing long positions. If you get any kind of minor declines around that 950,000 range, that could be a good range to create fresh longs as well.
Okay, Ruchit, let's also answer a couple of more queries that are trickling in. One wants to know your view on Gillette India from a long-term investment perspective, almost more than a 10-year plus perspective is what Yagnesh Balakrishnan wants to know. So how would one be viewing Gillette India at this point?
So I'll look at the monthly and the quarterly charts, and both the time frame charts are still positive. We have not seen any kind of trend reversals on the longer time frame charts. The stock did go through some corrective phase post 2019, but since April 2023, since the last year, we have again witnessed a gradual up move which has been supported by very high volume. So yes, longer term trend remains positive. If you are looking for such long term, then you can certainly buy in a staggered manner, where at current levels you can start buying, and in case if you get any dips in the near future, use those dips to accumulate more.
Right, so you can use those dips to accumulate more in Gillette is what he's suggesting. Let's also put our focus on AstraZeneca. Now that one too came out with its numbers yesterday. We saw its profit surging to about 128% at 39.5 crore rupees versus the 17.3 crores. Revenues have risen by a good 34.6%, coming in at 383 crore rupees. They have seen an exceptional item, which is, they haven't this time put any provision for that, whereas it was compared to a loss of about 40.2 crore rupees, and the board has gone on to announce a final dividend of 24 rupees per share coming in for AstraZeneca. Ruchit, quickly your view on the pharma pack. Yesterday we saw a whole host of activity within this space, because you had a couple of stocks like Glenmark Pharma and the rest touching new highs. But within this pack, do you think there is reason and there is value? In fact, right now we've gone through that whole phase of that dumping that we saw from China, which has somehow come to a halt. There is the regulatory hurdles from the US FDA have also smoothened out. So do you think there's enough and more reason to be looking at Indian pharma? And among these, is it the generics, or which ones would you prefer among the Indian pharma pack?
So if you look at Nifty Pharma Index, then the index has been in a consolidation phase since last 3 months, and in the entire consolidation, 19,400 has acted as a resistance almost thrice. So the index is not able to surpass that 19,400 level. Only when we see a breakout above 19,400 in the Nifty Pharma Index, then we would expect a sectoral rally, where most of the stocks would see a sharp up moves. But till then, I think one needs to be very stock specific within this sector. I think a couple of names that are looking positive. One is Glenmark, where yesterday we again witnessed a good price volume action, which indicates a resumption of uptrend from the post a small corrective phase. So Glenmark is looking positive over here. Another name would be Sun Pharma, where the prices have seen a correction in last few trading sessions. In fact, at the start of the April, the stock was around 1620, 1630, from where the price have corrected towards 1460, and it is now trading around its 100-day exponential moving average. So it's trading around its support, so the risk reward ratio looks favorable to take some contra trades over here. Sun Pharma with the stop loss below 1420, one can initiate fresh longs from a positional perspective. And in case if this 100 DMA becomes a fresh bottom, then we can see a next leg of upmove starting very soon.
Right. I'm also going to just shift focus a little bit on a couple of brokerages that have come out with their reports, and this time we're looking at Nazara Tech. CLSA has come out with a report, and they have a sell call on the counter with the target price cut to 525 rupees per share. They say that the Q4 has come below estimates, whereas the subscriber loss in Kidopia is also something that they're going to be factoring in. Ad revenue too has fallen, and which is why they have this particular call that they have put out. They are seeing a slowdown in the whole esports business, with Nodwin revenues also declining. They have cut the CL 25-26 revenues to EBITDA by about 6 to 13%. The stock, though they say, is still expensive at 39 times its CL 25 forward price to earnings. Now, the promoter's ownership, though, has also come down to a low just about 10%. If you look, that was CLSA or Nazara. You also have Jefferies that has come out. They continue to have a hold call, but the target price again cut to about 650 rupees per share. They say Q4 overall was a miss due to this continued weakness in Kidopia as well as the DataWorks and RMG segments. They've cut their FY 25-26 estimates again by about 18 to 21% for this particular, for Nazara Tech. They say the company plans to accelerate its M&A given the hefty cash balance that it has, which could work in its favor, but the pickup in organic growth will be key for its re-rating. Ruchit, come in here. Nazara Tech, how are you looking at the stock? Today is seeing some bit of gains, but it has seen quite some swings, and it was just the results yesterday, so which is why we saw that kind of activity. But going by what the brokerages are saying, one having a sell call, how was one to be looking at Nazara Tech at this point?
Technically, there is some trigger which is indicating that the stock might show some pullback move in the near term, because we have seen that as compared to mid-March, the prices have formed a new low ahead of the results. But the same has not been confirmed by the new low in RSI. So in technical analysis, we usually term this as a positive divergence. And such positive divergence leads to pullback moves, what we have witnessed yesterday as well as today. The stock has resistance around 705 for today, which is the 100-day exponential moving average. And in case if that is surpassed, then we could see a pullback move towards 750 levels. So it doesn't seem that we would see a very sharp correction, because prices have already corrected ahead of the results. So no, I think maybe if not a price-wise correction, there could be some time-wise correction in the stock. But only if we see the stock now going below 600 again, then we would expect some more correction. Otherwise, downside I think has been done, and we would see some consolidation going ahead.
Right, so you can expect more consolidation, but not any downside, is what Ruchit is saying for Nazara Tech. Let's also get a couple more queries answered then quickly. Ruchit, maybe I'll take this one up. Manikanta wants to know your view on L&T Finance from a long-term perspective. Maybe a 2 years time is what he's looking at for L&T Finance. What would you suggest?
So the longer term charts are positive, so one can look for fresh addition at current levels, but keep some room to buy in case we get any dip towards 145. So I would say if holding any existing longs, then continue to hold from a 2 years perspective, but looking for fresh buying, then buy about 40 to 50% over here. And in case if we get any dip towards 145, then add more at those levels.
Right. Well, Ruchit, do try and stay on with us. We'll try and get a few more queries answered, but also let me take the discussion a little diverse and, speak about the broader perspective of where India really figures in. We have a couple of macro cues to be tracking this week. We have auto sales data that will come out by the end of the month. We also have the Q4 GDP numbers that are likely to come out and give some more direction. And of course, let's not forget the general election outcome, which is expected on 4th of June. But we will have exit polls that will, be putting out some rough numbers by the end of 1st of June evening. So all of that is what is really going to also have some bit of impact on the markets nonetheless. So let's discuss that with Prakash Diwan. He's a veteran market expert joining us on the show. Prakash, always a pleasure to have you with us. Just straight up, how important do you think these election verdicts will be in determining the course of action the market is going to take? What are the markets discounting right now? What are they already priced in when it comes to the general elections?
Good morning, Stacy. So I think essentially what we are staring at is an event that you need to get over, but not necessarily something that has the ability to influence businesses. Okay, for the simple reason that continuity of the government is almost kind of priced into the markets, into all the parameters that you see. So what's going to happen is if we see a resumption of a BJP-led government, it's going to be business as usual, and probably with more focus, given the fact that a lot of capex and all will get restarted of sorts. What's going to happen to markets? I think there's a lot of money waiting on the wings from the FI side. You just see them create some longs, and the data tells us that from a short position, they move to a net long position, and that could continue growing over the next couple of days. That is the kind of money that might come in. But as investors, if you ask me, I would stay out of the market till the outcome is done, not necessarily because I'm not sure of the outcome or I'm worried about the outcome. It's more to do with whatever the action the market needs to take will possibly take away just about 4 to 5% of a move in some of the names that you would want to invest. But that doesn't necessarily mean that they would stay there. The big event, in my view, is going to be the budget. Though it's for a truncated year, it also kind of spells out a lot of policy initiatives that the new government would want to kind of share with the rest of the public. And that's going to be a more critical, more defining kind of event rather than the election outcome. So it's best to stay away. The volatility is going to be immense. You could actually lose a lot of capital if you're a trader and you don't get it right. But as an investor, don't be in a hurry. Nothing's going to change in a week. You'll still get opportunities to invest even after 4th June.
Right. So Prakash is warning the traders. They're saying that, of course, there is volatility. In fact, that VIX index has hit that 2-year high that we were talking about. But Prakash, back to you. Then in this, next innings, if you have to say for the market, so once we pass that 23,000 levels and more for the Nifty, which will be the sectors that you will be looking at? Like you did mention, in long term, we are going to see those with the capex spends and those with, the infra and all of that will come into focus closer to the budget. But besides that, in terms of if you have to look at private banks or IT, those are the ones that haven't really been the bigger players but hold a big weightage when it comes to at least the benchmark. So how is one supposed to be making their positions in such a market then?
So I think if you look at what's going to work, irrespective of what policy announcements we hear on in the budget, forthcoming budget, I think what is underperformed is likely to kind of play catch up. So you have pharma, the numbers have been very good. You look at some of the, broadly, if you look at the pharma numbers, they've been very, very positive. I would believe pharma is going to make a significant comeback, and it's also got some global headwinds to support it. You'd also have PSU banks do much better, Stacy. The reason is, I know the private sector banks are the ones that are lagging behind. They've traditionally been way ahead in terms of valuations and all of that, but they still don't have the comfort of low-cost deposits. While credit growth is something which the PSU banks have also caught on with. So it's not that, I can tell you a lot of the larger PSU banks like SBI, BOB, CanBank, they're very aggressive in terms of, wanting to grow their books. You have managers who really take initiative to follow up with clients, seek out opportunities to lend. So that's changing quite rapidly, and you can see it in the numbers. So I would believe these are two pockets that you should look at. Mid-cap IT is another which has already started moving up. You'll probably see that play catch up as the global setup starts kind of getting much more defined and improved. But from an election event perspective, you probably have profit booking come in some of the PSUs. My sense is the defense and railway PSU, which have already gone up in the last 2 weeks in anticipation of a favorable event outcome on the elections, we'll probably see some profit booking because they will need to now play catch up on earnings. The price is moved up, but the earnings need to catch up. So that's where I would kind of, it's a decent pair trade. You book out of some of the PSUs, some of the defense names, get into banks, PSU banks, get into mid-cap IT, get into pharma. So, you're more balanced in terms of your approach.
Right. Ruchit, I want to quickly come to you and because there's a query also that's coming in on Hindalco, and we've been seeing that particular counter, be there on the gainers list for quite some time. So what is the chart really saying, or rather what is the trigger there for Hindalco and also for the other, metal packs? We are seeing JSW Steel, we are seeing the similar to Tata Steel, all of them, among your top gainers in trade. What's really pushing these particular counters, and other charts looking in favor that one could be entering these, something the likes of a Hindalco?
Yes, the broader structure still remains quite positive for the metal names. In fact, we have seen that since the start of April, now in derivative segment, significant long positions were formed in many of the metal names. And in last 2 months, the metal space has been an outperformer within the entire sectoral moves. So I think still the trend remains positive, and we could see a continuation of this trend. Hindalco, I think within the entire basket, if one is looking for fresh entry, then I think this is one stock where risk reward ratio is still favorable. The stock has recently given breakout from a rounding bottom pattern at the start of this month itself, and that high top high bottom structure indicates a possible targets in the near term around 740, 750 kind of range. So at current levels, if one is looking to buy fresh, then one can go long on Hindalco for potential targets of 740, 750.
Interesting. So the risk reward still in favor in this one. So Hindalco could be something that you would want to enter. In fact, since we're talking about AB group of companies today, there is the earnings that are going to come out for Aditya Birla Fashion and Retail, and also there's some news coming in that UltraTech Cement is also in plans or in talks to acquire about 31.6% stake in UAE-based RAK Cement. So that is something that will perhaps see how UltraTech Cement also react to this. But let me go back to Prakash then and ask him about, where we've been seeing people sit on the fence, and we're hoping after the election results, we'll perhaps see foreign institutional investors or FIIs gushing into India. Do you think there's enough reason and more? Because, just earlier, I think last week we had Jeffrey's Greed and Fear report, which said that maybe they might look at India being overweight at this point and, perhaps look back at China. Do you think we still have enough and more reasons for the FIIs to come flocking in?
No, absolutely. Look at the cash numbers, the figures for the last 1 month. Have FIIs really put in a lot of cash into the markets? The answer is really not. The long positions are predicatedly on the future side. So what's going to happen is a lot of that long futures that they've created will also have to be backed with buying into cash. And if the ETF money has to come in, it will focus on the heavyweights. So we've seen that start. We've just seen that for a couple of days last week, and then you saw the impact on the Nifty. The Nifty has made new highs very decisively. Now we're talking about 23,000 plus numbers. Nobody's talking about retracement back to 21 and 22,000. So this is typically the market setup where liquidity rules the roost rather than fundamentals. So I think nobody is bothered about China versus India at this point, Stacy. You have the fat checkbook with which you're sitting on, and you need to deploy that. You're just being asked to wait for this outcome, irrespective of what it is. So once that's out of the way, you will see allocations come into India in a significant way. Look at Reliance, look at some of the heavyweights like HDFC Bank, look at ITC. These are the ones which are underowned in recent years. So you'll see a lot of money coming to that. I wouldn't be surprised if Reliance probably outperform the rest of the large cap Nifty names, or ITC starts participating in a significant way. So you could have surprises in that sense from a flow perspective. And of course, as I said, there are sectors which are underperforming or on the market, but not in terms of the business, like pharma, as I mentioned, or the first murmurs of some revival in demand from the FMCG pack. We had some numbers kind of start telling you that things are looking up. So the Daburs and HULs of the world will also positively react. So lots of things that could happen. But it's difficult times for traders, I can tell you that. It's fine if you're an investor, you have the luxury of time to sort things out. But if you're a trader, you could get things, it's extremely difficult to get things right.
It is just about the timing and, having that gut feeling perhaps, but traders mostly in this whole time of volatility will perhaps want to wait it out, or, have those contra bets that, or have that feeling that they're going to get it right this time. Let me quickly go back to Ruchit and get one query, and also then give us his recommendations that he has for our viewers. Quickly then, Ruchit, let's answer this query coming in from Sudarshanaya. He wants to know your view on IDFC First Bank.
So the stock has formed a very good support base around 75 rupees. If we look at the short-term chart structures, then on 28th of March, the stock made a bottom around 75 and rallied up to 86. Then again, in the next corrective phase, before the numbers on 13th of May, the stock took support at similar levels of 75. So in technical analysis, we term this as a double bottom, where same level has acted support as a support twice. So till the stock is above 75, I think the downside seems to be very limited from here on. The stock could take some time for some decent up move, but at least price-wise corrective phase seems to be behind us. So keep a stop loss below 75, and you can hold your existing long positions if any.
Well, I hope that answers your query. But also, Ruchit, do you have any stocks that you are particularly looking and you would recommend at this point, and why?
So Indian Hotels is one stock which is looking quite good on the charts. The stock has taken support around its 100-day exponential moving average in this recent correction. Again, when prices were correcting, the volumes were low, and the stock, when the prices are going up, the volumes have started increasing. So the price volume action also remains quite strong over here. Keeping stock below 570, short-term traders can go long on Indian Hotels for potential move towards 600 levels. PSU banks are looking positive. So within the PSU banks, PNB has a good chart structures, where similar what we said, that corrections without volumes and price up move supported by good volume. So the overall momentum looks quite strong over here. So keeping a stock below 126, one can go long on PNB as well for potential targets around 135. And my last call would be on TVS Motors. So entire two-wheeler space is looking positive. Whether you look at Bajaj Auto, which has seen more of a time-wise correction within an uptrend in last 2 weeks. Even Hero MotoCorp post numbers have given a breakout from its consolidation. TVS Motors has been forming a high top, high bottom structure. The price volume action remains strong. So I think this entire two-wheeler space could continue its momentum, which we have seen in last few days. So TVS Motors, the risk reward, from a risk reward ratio perspective, it's looking more favorable. Keeping a stock below 2180, one can look for entering fresh longs for potential targets around 2370.
Interesting picks that you have there, Ruchit. So he is putting PNB. There's also TVS Motors that he has out there. In fact, I want to speak with Prakash on the auto sector, because past 2 days those ones have been among your laggards, or at least that one being a drag. Of course, we do have in anticipation every end of the month. You do see this kind of reaction waiting in for the sales data that comes out by most of these OEMs by the first of the month. But why? What is happening in the auto space? Are there not enough launches this time? Are they not, or has that demand really slowed down? What is it that is not really pushing the needle when it comes to the auto pack?
So I think it's it's quite logical the way the auto cycle is panning out, Stacy. You typically have two-wheelers that see some sort of an upside, and then the passenger vehicles, and then of course the CVs. So we are going through the last phase where it's time for the CVs to probably start looking up. And if the government announces a big thrust on infrastructure, you'll probably see the CV cycle kind of get some strength. But as of now, if you really ask me, everybody is consolidating the launches that they've been busy doing, whether it's on the EV side or the hybrid side, or people who are filling gaps in their portfolio, like M&M is looking at petrol engines, Maruti is looking at hybrids, Tata Motors is looking at smaller cars. So all of that has happened in the last couple of years post-COVID. I think it's time for consolidation. And if you ask me, post the numbers, one of the best bets on the auto side that I find, and this you could go and buy right away. There's no need for you to wait for election outcomes here. Is Tata Motors. Tata Motors post the numbers just because of that cautionary commentary from the management, lost a lot of ground, but there's nothing in the commentary that is adverse. In fact, even if it continues to do as well as it did this year, I mean in FY24, I think it could probably rally very hard from here. So I'm quite positive on that. This is the stock that I would bet on for the next 1 year at least. and with a significant outperformance of 30-40%, maybe 50% over the next 12 months. So you have a mismatch here. Performance is good, the stock is not capturing that. So that's where you will probably be rewarded.
Right. So while Ruchit has TVS Motors, you're looking at Tata Motors, at least from a 1 year perspective. But let me thank both my guests because we seem completely out of time at this point. But Ruchit Jain from 5 Paisa as well as Prakash Diwan, thanks so much for joining us and giving us your perspective and helping us understand how to be traversing this kind of volatile market. But right now, if you look at markets, they're trading rather flat, we would say at this point. But most of those block deals that we were speaking about, most of them have come through. In fact, I know wind almost nosediving by about 10% after the promoters have offloaded about 5% stake. There's also another block deal from PB Fintech, and this one coming quite close to the previous one, where about 677 crore rupees of block deal were given to understand, with Tencent Cloud Europe having sold its stake. So 4 of those big block deals that you're seeing, a whole host of brokerage reactions. But for now, the Nifty and Sensex both trading rather flat at this point and not managing to touch those new highs. But with that, it's a wrap and a goodbye from the entire team that puts this show together. Thanks so much for tuning in. Do post us your feedback and also keep writing to us your queries, and we try and get them answered by the experts on the show. And also for all your other updates, continue watching Moneycontrol as well as the Moneycontrol app.